there, my friends. Chris Marcus here with you on Saturday, November 18th for today's weekly market wrap-up. Another fascinating week in the markets. News is happening fast now. And with that said, let's get right into it. Of course, kind of hard to ignore the Federal Reserve, as silly of an institution and set up as it may be, to the degree that the world still reacts to the things they're doing, and that they can affect and distort and twist and mess up markets as you will. Interesting comments from one of the Fed governors. This was San Francisco President John Williams. And the headline sounds great. Williams calls for a global rethink of monetary policy. And, well, maybe a couple of years ago, I would still hold out that glimmer of hope, faint glimmer of hope that, maybe they're going to stop printing money and they're going to retire and disband. Unfortunately, no such luck in this case. Because here, San Francisco President John Williams said Thursday morning that to fight the next recession, again, it's interesting. Last week, we mentioned how Janet Yellen saying things are great, yet there's an uncomfortably high, her words not mine, chance that unconventional policy will be needed to be in use again. So again, similar comments from John Williams, where the economy is so great, why are we talking about more money printing? But let's take a look at his quote. "We will all be better able to contain the next economic recession if we develop approaches that succeed even when countries are simultaneously constrained by the lower bound." So think about that. He's already talking about the next recession at the same time when we're at the lower bound. So that doesn't even mean that, again, I'm just taking his words here, and who knows, maybe the guy was drinking and he wasn't thinking straight, but at least if you take his words on face value, whether he's intending to say it or not, he's saying simultaneously, next recession and rates will still be low. So where's the normalization? Well, I thought we were raising rates, everything was good. And that means taking into account the nature of monetary policy spillovers. Well, you got a mess to clean up there. Now it's interesting, this paragraph, which isn't a direct quote, so I'll factor that in, although I'm assuming Reuters is somewhat taking his words because it's followed with this quote. "Strategies that central banks should consider, including not only bond buying and forward guidance used widely in the last recession, but also negative interest rates that was used in some non-US countries, as well as untried tools including so-called price level targeting or nominal income targeting. Central banks may also want to consider setting a higher inflation target." And I can only assume he agrees because he says each of these alternatives have significant advantages and disadvantages, which need further careful study and discussion. Well, I can answer that. I've been discussing and studying it for the last 10 years. It's a bad idea. And just incredible that on one hand, selling money printing worked, everything's fixed, and now he's talking about negative interest rates. And in case you haven't heard that before, they're doing it in Europe, a bunch of other places. I would say that we already have negative interest rates in the US if you actually had an inflation metric that included the cost of things that are going up in price. Keep in mind, a lot of these things are stripped out. Don't take my word for it. Do your own research, or I'll give you a shortcut. You can go over to John Williams' Shadow Stats and just see how some of these formulas get tweaked so the things that are moving up in price are substituted. But what he's saying with the negative interest rates is essentially you put $100 in a bank that has a good chance of being insolvent a year later, and in the best case, you get back 97 or 98. Although even in that scenario, because they want an even higher inflation target, even if you get your money back because the bank doesn't go bust, it's going to be worth less. And in case, I don't know if anybody else eats at Whole Foods, where I'm wondering each time I check out if there's financial aid available with the meal. But John Williams thinks inflation isn't high enough. Now, if this all sounds bizarre, you're not alone. In my personal opinion, the thing is a massive scam. I don't think the Fed is designed or trying to make life better for everyone. Maybe there are, let me rephrase that. I do believe there are good people in there who are attempting their best, but certainly if you've ever read The Creature from Jekyll Island, which goes into the history of the Fed, how this whole monster came about, I'd say it's safe to say a direct violation of the Constitution or any sort of rational, honest government. And it's not out of left field that the whole thing was done in secret. So again, latest reason why Fed can say whatever they want, although here I think they're actually telling the truth. And it just exposes the flaws in the logic, the story, the argument, and why, to me, it's so important to not be counting on Fed advice for what you're doing, but seeing where these things are headed and making your own good decisions. Of course, what would it be a week going by without moves to develop new weapons? All right, yes, Washington is raising pressure on Russia, saying it's filing an arms control treaty. So solution, there's a new type of missile we need. Again, where is the money coming to pay for this? 21 trillion in debt ceiling raised every time. And as we looked at last week, I believe we talked about this last week, there was a report by Catherine Austin Fitts, it's not perhaps in the title, but basically she did some research with Jerome Corsi, an investigator I've been familiar with, and found his work to be incredible. And also economist Mark Skidmore. And the reason I put this video up here is that I understand it sounds, wow, the government lost 21 trillion seems hard to imagine. Although if you take a look at that title, Deep State Globalists Want to Destroy U.S. Constitution, Catherine Austin Fitts, you can go in and hear the research. These aren't people that are just high school flunkies making stuff up out of nowhere, went through the own government numbers and come up with $21 trillion of unaccounted for adjustments, which is a stunning number, especially considering that the Federal Reserve's M2 money supply gauge, which is supposed to tell us how much money there is around 4 trillion. So now there's a missing 21 trillion. I mean, that's not a small difference. Also interesting, did hear an interview with Rob Kirby this week. Good investor I like following, writes and comments a lot. And he mentioned he was so confused by these numbers, so he emailed Mark Skidmore. And one of the things that Skidmore told him was that a lot of the data that he had looked at has been taken down from the government websites that was on, which he felt was so that people couldn't continue to research this any further. Certainly not shocking. Again, if you remember Donald Rumsfeld, September 10th, 2001, yes, the day before September 11th attacks, announced the Pentagon had lost $2.3 trillion. Of course, not much was heard about that after September 11th. So you make of it what you will. It's accounting fraud, which is par for the course for the U.S. government. But again, don't take my word for it. If you want to hear more about the actual numbers, the research methodology, and see for yourself, there's the video you can watch. And of course, our last topic for today's video is the cryptos, which you can see it's been quite a volatile week for Bitcoin. Went down into 5,400s, then back up to 7,600. Litecoin up to $67. And it's not unrelated. In fact, here's an idea that will give you something to think about, at least until next week. By all means, if you have comments or thoughts or questions, leave them below. I'd love to hear your view of this one, but it hit me a couple days ago where if the dollar were already in hyperinflation, how would you know? Now, typically, you'd see that reflected in the financial markets. Maybe you'd see crash in the stock market, trouble in the bond market, or you'd see gold and silver rising, which is historically the indicators, are basically when it's happening, those are the effects. Now, fast forward back to 2017 in the bizarro financial world we live in, and as we've talked about a lot before, the markets are rigged. You have printed money pumping up the stock market. If you really want to get into something a bit more complex but truly fascinating, you can look at the Exchange Stabilization Fund or the Plunge Protection Team, both of which are not quite as public, yet from the people who research and dig in, you hear that there's tons of money, trillions perhaps. Nobody really knows because we don't get accurate information. We have to have other researchers come and find 21 trillion is missing. But you have these manipulative forces propping up the stock market. The Fed, they can call it interest rate policy all they want, but if they decide we're going to print money to lower interest rates, that's a distortion, a manipulation of the market. The market's saying one thing, and the Fed is just coming and saying, hey, we're going to add a couple zeros, print some more cash, and make it whatever we want. So the rate might be trying to move, but is unable to because it's distorted. Similar with gold and silver, you have tons of paper contracts sold that can't be delivered because the metal doesn't exist. So the price of gold and silver stays low. So all these typical signs that when a currency would be really failing and you would see evidence or indicators or the canary in the coal mine, but if they're all being distorted, except for the cryptos, it's interesting to see the pricing in the cryptos and why it's going up. Yes, there's a lot of actual value in the cryptos. Providing a new currency system, there's value in that. If we can replace these financial exchanges with a crypto-based system that doesn't have the black holes where billions go missing, or you can have paper selling on the COMEX, yes, there's value in those. But the more I'm thinking about it, what if, because you can't sell cryptos that you don't own, perhaps the hyperinflation has begun and we're seeing it reflected in the price of the cryptos, which is why these numbers are getting so big. So it's not as much the argument that people say where, all right, the prices are just going up, they've accelerated, it's a bubble for no reason. You got to put it in the context of what's actually happening. And when you hear about some of the bigger smart money shops taking money out of the dollar and needing to put it somewhere, that's why you're seeing money going into the cryptos. And given the situation that we have and how distorted and wacky things are getting, I don't see that stopping anytime soon, and I'm beginning to wonder if that break point that many have been thinking about for years, some people even decades, has actually arrived. And the evidence of that is the pricing we're seeing in the cryptos. So something to think about. Again, leave your comments below and hit the subscribe button. We'll keep you posted every week. Fascinating times in the markets. Certainly not the easiest environment if you're just trying to keep your money safe or invest it wisely. Although it can be when you understand how these things are going on, which is why we're doing these videos and trying to make things a little bit more clear. So with that said, thanks as always for watching, and we'll see you again later this week.